Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show, episode 97. My name is Cyprian Francis, and with me, as
Wow.
always, the main man of the hour, AJ Brown. Good morning, AJ.
Hey, Cyprian, how are you doing?
Doing good, doing good. Today is September 8th. We
Yeah,
are in the mix of back to school, fall. People are getting back from vacation,
yeah,
but it seems like the market doesn't know what to do, right? We're getting a
yeah.
lot of information. What are you seeing?
I mean, September is traditionally a very difficult month to trade. It's all over the map as folks get settled back into their, if you will, work. Next 9 months of focus, right? Just like you said, kids are back into school and all that. We, coming back from this holiday season, we had quite a little bit of economic news released this week. So let me go ahead and pull that up. I'll just make it nice and big on my screen so everybody can see. What we've got here is some factory orders that were released on Tuesday. These came in better than expected, right? Meaning, if we take a look at these numbers, I'll drill down a little bit. We were expecting the factories to kind of really slow down. We're seeing inventories build up, especially in the like aerospace and defense area, or Boeing, right? Building aircrafts. It's kind of getting like they're being backlogged, like the airlines are putting the orders on hold and these planes still keep getting manufactured. But we were expecting a drop in manufacturing by about 2.6%. It actually only dropped 2.1%, which tells us that, hey, maybe things aren't slowing so much. And then you come to Wednesday, and we had this number over here for the international trade in goods. That's our trade deficit. And so we were looking at our trade deficit, and we were expecting a 68 billion. Just so folks know, as long as I remember, the US has been bleeding about $70 billion every month to other countries in the form of a trade deficit. That's what everybody's been focused on for all these years, is this trade deficit. It just so happens that we don't manufacture as many things as we used to, but we buy a lot from other countries. So that's what records. But this particular month, our trade deficit dropped by 60, it was 65 billion, but we usually expect a lot more than that. And you'll notice that last month, when they went back and really dove into the numbers, it dropped even less than they had initially reported. So again, this is positive news from the economy, but kind of, if you're getting all this good news, the services index came in better than expected. This is, of course, where the US kind of does um, excel in delivering services. You can see that that came in better than expected. And that's not just like services, meaning the waiters and waitresses at our local restaurants. That's things like consulting services, that's like accounting services, all things that we can deliver as add-ons where it takes a human. And then the beige book, right? This is the information that the Fed uses about 2 weeks from now in deciding what they're going to do about rate hikes. And an initial look at this beige book data tells us that the Fed's not so much worried about a recession. Now, you can probably guess where I'm going with this, but continued jobless claims on Thursday came in stronger than expected, meaning that we were thinking that there'd be a little bit of a pullback. Instead, unemployment is doing well. Productivity and cost, everything is doing much better than expected. And this is where good news can become bad news, because investors are like, wow, if everything's doing good, the Federal Reserve at their next meeting may decide to not take a break on raising interest rate hikes and may decide to tighten a little bit more, especially if they're not as worried about a recession like we thought they were.
And so is that the consensus that we're going to be sitting tight going into the next quarter? And if they were to raise, that would be the shocking news, correct?
That would be the shocking news. So here's this. This is a kind of an interesting little take by the Chicago Mercantile Exchange Group, the CME Group. They're according to the probabilities that they've calculated from investor sentiment, they're expecting that the Fed 95% probability that the Fed is going to hold its rate and a 5% jump that it may actually raise rates. So the consensus right now, but just a day or so earlier, you can see those numbers were different. If we look down here, you can see a day ago, this number was up at 8%. So there was this growing belief earlier in the week, right after the holiday, that the Fed might actually raise rates. Now, when we look at the November meeting, meeting, it's like almost 50-50. It's about 40-60. But some people actually even believe the Fed may be going up a 50% rate hike in November. And then by December, again, we think that there's at least going to be a 40 to 60% rate. So this quarter rate point is coming. Everybody knows it's coming. Is it going to come sooner than later? With all this good news in the economy, kind of hinting that things aren't slowing like the Fed thought they would, investors are worried that more tightening will come sooner than later. And that's what we saw in the markets, Sib.
Yeah, that's what I was going to get to is how are we pricing that? Because we're still pretty high when you look at the life of the market, right? And
Yeah.
we've just pulled back a tad. And last week we talked about how we might just be in this range for a while. And are you
Mhm.
still seeing that this week?
Well, okay. Let's take a look at my retracement analysis. I swear by this retracement analysis. It has, when other folks who comment on the markets have said one thing and I've said the other, more times than not, I've been right. And I just base everything on this black and white retracement analysis. And so let me just, you don't mind, Sip, I might take a moment and give some of the highlights of how this works. What we do here is we take a look at a reversal to reversal, like top to bottom and then bottom to top. How far do we reach each time? Right. And we compare it to the last move. So for instance, if you take a look here from the move from July 7th through July 31st, that creates a baseline for the next move. So if you look at the next move that started on July 31st and went all the way to August 18th, you can see that this move actually overshot the previous move. Whenever you overshoot a previous move, we call that an expansion move. Whenever you undershoot, go less than the previous move, we call that a contraction. And expansions are always in the direction of the current channel trend, whereas contractions would always be against the current channel trend. So when we saw an expansion move go in the down direction, we actually looked and we had currently been looking at the channel being in an upward direction. And that was our signal that we would start looking at more of a downtrending channel than continuing with the uptrending channel. Then we looked at the next move compared to this previous move. And this week, we actually got this top confirmed as that truly was the top. It took about 3 days after that top was formed, but we confirmed with a simple lagging indicator. We used the 3 and 5 day exponential moving average that on September 1st, we did see this top. So now we compare that to the previous. And you can see I've got these drawings. So first of all, it was less than the previous move. So that makes it a contraction move. It was a contraction move up. And remember, contraction moves are always opposite the current channel. So this agrees with the previous move saying we're still in a downtrend. And now we're moving down again as of this week. And we're waiting to see, where is this bottom going to form? In my drawings, I always color these current movements. If they're not confirmed yet, they'll be a different color than the ones that are. So this yellow signifies that this one could still go further down. We have one up day that's happening right now as we speak, but for the most part, we've been going down this week as investors have had that worry about further rate tightening. Now, you'll also see that for each move, I put these color bars in here. And these color bars go the next level and kind of tell us whether the move is an ideal move for trending or if it's kind of a weak move. So when you have an expansion move, SIP, we want this move to be greater than about 125% of the previous move. That would put us into this green zone. That would be an ideal trend change. That would mean we're in an ideal downtrend, one that trend traders would love, one that swing traders, anybody who's a directional trader would like us to have an ideal downtrend. You can see here that this first move that we had fell short of that ideal level. Next, we had the move in contraction, and contraction moves, we like them to go about 50%, somewhere between 40 and 60% contraction. And you can see we overshot that again, making it not an ideal contraction. That's why it's in this orange zone. The orange zone is considered not ideal. So now we're pulling back again. We're currently in the pink zone. My forecast is that this one day up is kind of an aberration and that will continue to go down. And I have a feeling that we're going to wind up getting our next reversal in this orange zone. In fact, I would be surprised if we come down to this tested line of support. So I think that we've got an up day happening today, but and my confidence in these is not more than about 60% because September, like I said, is always a very confusing month to trade. But I have 60% confidence that we haven't yet seen our bottom reversal. We're going to go down lower, but I don't think we're going to go into this ideal range that the downtrend. Every time we get into this orange zone and don't go any further, it actually is less of something that a trend trader would like to trade. And it's more of what we call a sideways choppy market. And so I've been saying for like the last 2 or 3 weeks that it looks like we're going to be in a sideways choppy market, at least up into the holiday season. And I wouldn't be surprised if we don't begin starting 2024 with this sideways choppy market.
Well, I think your analysis there was very in depth, and there's a lot of solid points. And fortunately for the viewers and the members of the Trading Trainer community, the strategies that you implement are perfect for these kind of sideways choppy markets, and it allows you the opportunity to get creative, right? So if anybody's watching, listening for the first time and hasn't really explored options, we're going to go ahead and give everyone an opportunity to get involved, to learn a little bit more about what AJ and the community is doing. He's got an amazing daily workshop where he takes what he just described in detail, even further in detail with examples. But that's also why we have the show. AJ is going to give us his pick of the week. We've got some speed round questions, some tickers that are in the mix. And so, I think the moral here is we're going to be seeing some consolidation, but you as investor, you can still get involved. There's ways to profit, to make money in this market, even if it's not buy and hold, sell and hold, the basic investments. So we're going to go ahead and take a break here. If you're watching and you have a specific ticker that you want AJ to run through, feel free to throw it in the chat. We'll see if we can get to it. Otherwise, we're going to take a and we'll be back and talk about what the everyday investor should in this market. So a bit of an extension of what we described the market as. Now we're going to get into what we can do to take advantage of it and be prepared. Sit tight, folks. We'll be right back.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right, AJ. So in your program over at Trading Trainer, you get a lot of fresh new investors, and I suppose
Absolutely.
that a common question is, what should they be doing? And I guess it's broad in the actual question, but what are you trying to specify with what an investor should be doing? Because there's a lot of things. We could be investing in real estate, we could be investing in crypto, antiques, things like that. So where do you want to take that question?
Yeah, well, the scoop is we get a lot of professionals. We get a lot of people who have other things that they're focused on. And when I say professionals, I mean very career-oriented folks. Usually they own their own business. We get a lot of like lawyers, doctors, even folks that own businesses like HVAC, plumbers, folks that have a passion around something, and they are typical investors where they would like to put their money, their hard-earned money, into some sort of investment, but they don't have the time to be active traders. And so they kind of heard about these um, options, and they want to learn how to use those to those benefit. And one of the interesting things, Sip, just on a tangent, that I hear is that people sometimes construe option trading with day trading, and it's like apples and oranges, right? An option is an investment vehicle, and it's a very unique vehicle. It falls into the family of derivatives along with futures, but day trading is kind of the periodicity, if that's a word. That's the that's the how often you trade, or whether you're an very active trader or not. And you can be a day trader who day trades options. You could be a day trader who day trades anything, whether it even be in the classic markets like stocks, options, commodities, foreign exchange, currencies, things like that. And you can also be not a day trader. And I've kind of been coining a term recently that I call passive trader. And I know that's like an oxymoron, but in order to earn better than passive investments, right? Because if you're a passive investor, somebody who wants to, put your money in something but not think about it, right? Your rewards are going to be limited. And a lot of the folks that come to me, they've seen how investors can earn more money, and so they want to find that compromise between being, getting the rewards of being a trader, but not really taking on all. They just want to dip their toe in the water, right? They don't want to become a full-time active day trader per se, because they have other interests. We also have a lot of folks that are interested in family life. That falls, squarely on my shoulders, and they just want to be there for their family, and therefore they want to learn how to make their money work for them, but their time goes primarily to their family. Or last but not least, we've got folks that just have passions and hobbies. We've got full-time athletes and golfers, and not that a golfer is not an athlete, but people with hobbies. And again, that time is more important. So what the scoop is the reason why I got interested in options is options are uberly flexible. They allow us, by combining, options together into strategies, as well as just the fact that when you pick an option strike price expiration date, that allows the option to be, it changes the personality of how that option responds. Everybody thinks like a call option is a call option and a put option is a put option, and that's not true. A near term at the money call option is way different than a far out in time, deep in the money call option, or an out of the money 3 to 6 month out, call option. They're three different animals. They act completely different. So understanding these nuances, you can basically play the markets like a fiddle. And so that's one of the things that I focus on. Now, if you're an active, if you're just an investor right now, I hate to be the bearer of bad news, but it looks like if you just hope to put your money into an index fund or a mutual fund, even with a pretty good active manager, I think your returns are probably going to stagnate for the next couple of years. It's going to be, we had this huge run up during the COVID pandemic, but it looks like the markets may be in a um, sideways choppy pattern for the medium to even long term. Right? There's going to be a lot of Fed tightening. They've got a lot of quantitative easing to unravel yet. They they did some crazy rate hikes in 2022 that just don't seem to be kicking in at the scale that you would expect them to. So I think there's going to be more tightening, and so um, learning now is the best time ever to learn some sort of strategy that you can make the markets work in your benefit. And so I almost feel like if you think you're going to put your money in a buy and hold thing and weather the next 3 years, I think that that is going to be, if anything, just a exercise in your patience, because I don't think your portfolio is going to grow. Whether you wanted to get into crypto or real estate, real estate has its pros and cons. If you want to be a passive investor or passive trader, maybe real estate is not going to be your favorite thing because that could be another full time job. I'd stick to the markets because, again, all you need is a computer and an internet connection, but maybe increase your knowledge and your skill level and pick up something like these options derivatives. That's what attracted me to it, is that I don't have to be a day trader, but with this knowledge of how to use options, it's like having, instead of a tool chest with one screwdriver and one with one wrench, I instead have a tool chest that has pretty much any tool for any situation. It's just about having the right tool chest to apply to what's happening right now. And that's what I think people should do, Sip. What do you think?
Well, I completely agree, and that's why we have the show. That's why you have the program. Whenever I meet a new investor or trader, the way that I try and explain the options market and tool is with the insurance contracts. Like
Hmm.
I've always appreciated your uh, connection of how insurance, how, because most people pay for insurance, but they never use it, right? And so when you see a storm coming and you look in your tool chest and you have the different insurance contracts and everybody's coming to you and they're like, hey, let me get an insurance contract, let me get an insurance contract. Those are kind of the tools. And what's cool with options is the leverage component, where you don't necessarily need to put up all the capital that would equate to owning the stock. It's more of a representation of the ownership, and the percentage movements are higher, comparable, lower. But that's kind of the art, and that's why we have the show, and that's why we have a great audience and viewers who are throwing out some questions. And so let's get into it. Let's go over some examples of
Hmm.
how you as a seasoned investor, options trader, look at opportunities, and then you go into your tool chest, right? And so let's go ahead and start with your pick of the week. And this is a new one that I don't think we've covered on the show, and that is Hormel Foods, ticker symbol HRL. So,
Yeah, and
AJ, how are you
I
setting up this?
I definitely have to thank the program participants in our program for this one. They came up with this one about 10 days ago and brought it up at our session. So if you are part of our program, once a week we get together and we workshop a candidate. So generally, how it works is folks who have gone through kind of our training and have gotten good at finding these underlying symbols that we might want to use some of our strategies on, our option strategies on, they'll throw them at us during this workshop and ask us to give our 2 cents on their pick. And so Hormel Foods was thrown at us, and we looked at it and we're like, you know what? This is an interesting candidate to look at. So let's take a look at it on our screen here. So you can look at this 6-month chart and you can see that this guy has been sideways channeling. And if I want to sell an option against this, one of the things I might want to look at is this a pretty solid symbol? And so one of the things I like to look at is, do they report good earnings, right? So if I take a look at let's look at the last year. So if I come over here and look at 1 year worth of movement, you can see that Hormel pretty much stays in the same trading range. Every once in a while, they go up or down a step function, but then they stay in the same trading range. All along, looking at their earnings announcements, they're always making money. And that's because they're in the food industry. They're not a very popular stock, so you're not going to have mainstream media commenting on Hormel Foods, causing a whole bunch of uh, folks that pay attention to mainstream media for their investment advice. You're not going to have them swaying price left or right. They also give their investors a pretty nice dividend every quarter. That's a sign of a good symbol that we would want to get into the insurance market. And by the way, Sip, that was absolutely amazing how you described options, because if you think about it, what you were describing is that near term at the money option is the one that works like an insurance policy. And we like to actually not only be the buyers of those, but sometimes, depending on what side of the equation makes sense, we like to be the sellers. If you think about, like, for instance, your company that sells you auto insurance, and everybody's seen auto insurance rates go up this year, or people, your homeowners insurance. Think about the insurance companies on the other side. They are making a killing, right? Think about medical insurance, right? So why don't we get into the business of selling insurance? And that's exactly what that is. And then you also described the leverage component. That leverage component is when we use a far out in time, deeper in the money option. And that's where we can create a stock replacement, but at a cheaper price. So I love how you've mastered all of that, because that is kind of truly the concepts behind this. So yeah, I like Hormel Foods. Back on topic. One thing I've noticed is that Hormel Foods just recently dipped, and they dipped below our tested level of support, but they're finding a bottom right at my threshold of where I might stop watching this symbol. But I'm not going to stop watching this symbol. Instead, I'm going to see if indeed a bottom forms right now. So that's what I wanted to target folks to. A bottom has not formed. And so one thing I teach my folks is to wait until you see the whites of their eyes before you pull the trigger. So we're not ready to trade today. We may be ready to trade early next week we want to see the signal. But if we do, the option strategies that we want to apply, we want to leg into some sort of position. In other words, we want to set it up so that we can sell insurance in the not too distant future. And so, in order to sell the insurance, you have to have some sort of covering position in place. What that means is if somebody does cash in your insurance policy, you'll be able to pay out. So you set up some sort of way on your side in order to pay out should you get cashed in. And then you can sell the insurance policy, hoping the folks don't use it, and be safe either way. If they do use it, you can cover their claim. If they don't use it, you just collect the premiums, right? And so the initial covering position here could be buying some stock at this low price, or using that leverage, like you said. So buying a deep in the money, far out in time call option could be good for Hormel Foods. And as you can see, Hormel Foods does have some activity. If I come on out here to say the June option, I could go pretty deep in the money. I base my thoughts on if there's activity based on how small or how big the bid ask spread is. You can see here the bid ask spread is not um, large at all, which tells me there's a lot of activity. So you can go deep in the money, far out in time, and pick an option that would be a good stock substitute. So I've got those two choices. And also, should you decide that you want to keep Hormel Foods in your portfolio for the long term, there's folks who, we talked about it last week, how you change your perspective on how you invest, depending on where you are in your life timeline. You may want to have a stock that pays such a good dividend in your portfolio for the long term. You could use a what we call a cash secured or naked put strategy to buy this stock at a real discount. And in the meantime, while you've got that order out to buy this at bargain basement prices, you'd get paid for putting those orders out. So that's a fun strategy I like for when I'm accumulating stocks into my portfolio. So all three of those strategies would work really good for Hormel Foods. My suggestion is let's wait for that bottom signal to be found before we place any of those strategies or put those strategies to work for us.
Yeah, I feel like any new options traders, this is a great example to get you into the concept of premium selling. And it's kind of like, hey, here's a stock that we think has found a bottom. So we could either buy it or we could have an insurance contract that'll give us the opportunity to buy it. And that in itself has value. If it turns around and it starts to move up, okay, well, we own the stock or we own the ability to
Buy the
buy the
stock.
stock. And so as those move up, we have some return, whether it's a percent, 2%, 3%, 5%, whatever it is. But at the same time, we're going to go ahead and generate some income by selling the insurance contract for if it gets to that second red line
That's
up
right.
there. And so if it hits that second red line, well, we've made all that money because we bought it at that first red line on the bottom, and we're gonna cash out. We're out of the position. And what I enjoy in the 97 episodes that we've done is that this can happen within a few weeks. It could take 2 weeks. It could go out to 6 weeks. You could even probably hold this position here for a few months if you don't get called on the upside, right? Like if you don't get cashed out. So that's what I like about this for anyone that has an investment portfolio where they own a lot of stocks that maybe have pulled back. Well, this is a great time to go get those insurance contracts to earn some of that premium. But we don't know where the market's going to go because as you did the analysis in the beginning of the show, we've got that sideways action. But if you own some of the stock and you're getting the premium, that sideways action starts to add up in your portfolio as income. And so that was Hormel Foods. We'll go ahead and keep an eye on that.
Yep.
So let's get into some other names, because all week we've got viewers throwing out some tickers in different industries, and so let's just run through one that just came up on the chat real quick since it's there. And that's ticker symbol C, which I imagine is Citigroup, which would be harping on some of the financial uh, things that are being affected by a lot of the interest rate stuff.
You know, what's nice about Citigroup is it is one of those banks that's listed as too big to fail. They have been still being held to that level of having to be tested, stress tested. So Citigroup is not going anywhere. Great symbol to sell premium on. Great price. So Citigroup has come down in price over the last couple of years to where it's affordable for us to be able to purchase it. You can see that they make money every quarter. They give out a real nice dividend, right? So it wouldn't hurt to own this stock. And similar to Hormel Foods, through this correlation effect, they've dipped a little bit. So, same thing as I said for Hormel Foods. I'm not worried about this dipping any further. Now, you could put a threshold on that. And you could say, hey, if this starts to go below $39, I might think about this separately. But looking over the last year, I'm not worried that it is where it is, right? In fact, I would be doing the same thing. I would be looking for that symbol, that signal that it has found a bottom and it's going to do some appreciation. And if that signal comes in the next week or two, I wouldn't be worried at all about purchasing some of this stock. And if we wanted to take advantage of, say, for instance, locking in a bargain basement price, we could actually get paid for placing that order now. So let me explain that one. So for instance, say we're totally okay paying $40 a share. It's currently trading at $40.50. You've got the $40 a share. You're willing to pay $40 a share for this symbol. Don't place a limit buy order at $40. I've got a better idea for you. Come on over here. We're looking at the option chain. I'm going to look at the September 15 option. This expires next Friday. So in about 5 trading days, maybe 6 trading days if you count today. And let's look at the 40 strike price. So here's the 40 strike price. What I could do is, instead of doing just a limit buy order, which gives me nothing, I could instead sell this $40 cash secured put option that expires next September 15. If I sell this thing, I'm going to make 30.5 cents per share right then and there for selling it. Now, what does this mean? It basically means I placed that limit order, and that limit order is going to be good until September 15th, next Friday. So anytime between now and next Friday, somebody may decide to sell me this stock, and I'm only going to pay $40. Now, September 15 may roll around and nobody will decide to sell me that stock for $40. That's fine. I got this 30 cents, 30.5 cents up front. I'm going to get to keep that 30 cents, 30.5 cents up front no matter what. Say September 15 rolls around next week and somebody did decide to sell me this stock for $40. Great. Actually, I collected that 30.5 and I just watched. It looks like it just went up to 31.5 cents. I got to keep that already. So in effect, I didn't buy it for $40 a share. I bought it for $39.68.5 per share. So I get to keep that premium no matter what. And if somebody sells me the stock, that's great. I can apply it and take it off the top. If nobody sells me that stock, that's fine too. I'll keep that money and I'll do it again in October. I'll pick a stock if I want to. So instead of just doing a limit buy order, do your limit buy orders this way and get paid to place your orders. Get paid to buy stock at bargain basement price. That's what I might do on my Citigroup.
I imagine there's potentially a few financials that are in a similar pattern. So we'll keep an eye on that. And that one came from Mari on YouTube. So
Thanks,
thanks for
Mari.
tuning in, Mari. We appreciate you. Let's dig in some of the other names
I
in the
want to
speed
visit
round.
GM. We visit GM
Let's go.
every
Let's
week.
do GM.
So GM's still loitering around that level of support. In fact, the signal I like to use for a lot of these symbols, not all of them. I always do some back testing to match the signal with what the symbol is doing. But one of my favorite signals is this, what I call the fast MACD. And this is nothing special to AJ Brown or to Trading Trainer. The fast MACD comes right from the MACD guys. But you can see that yesterday, at the end of yesterday's trading, that we got some sort of exit signal. But guess what? It never confirmed. I'm going to zoom in here so you can see it a little bit better. It never confirmed. And then today it's already reversed. So, what that's telling me actually is that there may be an opportunity to do some dollar cost averaging, buy more of this stock and add it to what I already purchased about a week and a half ago, and lower my break even price and basically create a second position out of this or add to my first position. And I'll be ready for any appreciation on the GM stock or on the GM back month option. And I'll be ready to sell that insurance in the future. So I'm still super duper happy with my GM position. We'll check in again with it next week.
All right, there's a recap on GM. So now we'll head down south to Dallas, Texas, and this is Styles. Interested in
Styles.
a commodity name or a commodity alternative, which is U.S. natural gas, ticker symbol UNG.
Cool. Good one, Styles. This is an ETF. It's a great way to trade natural gas on the equities market, and that means that we can definitely write options against it. So I like it. Natural gas, I mean, it doesn't look like it's changing any price anytime soon. It's been trading in the same range for a while there. I always like all these companies that keep telling us that natural gas is going to go up in price. I'm sure it will at some point, but it hasn't gone up in price in quite a while. With that said, Styles, it's forming a bottom, and that's kind of cool. One thing, though, I have to point out is that it looks like it trades in about $1.50 range. This might be a little bit more difficult for the beginner to leg into, not impossible. But I think that it's a little bit moving faster than what a lot of the beginner traders like to trade. So just keep that in mind. And another thought is you don't necessarily have to leg in exactly at the bottom and the top. That's optimal, but so long as you create a little bit of distance between when you place the first and the second leg, it's still going to be to your benefit. So maybe you've got something going here. Let's take a look at that fast MACD. Again, I might believe that the fast MACD is not fast enough to follow this, but um, yeah, the fast MACD is lagging, right? You can see that we clearly have kind of an up movement here, but the fast MACD hasn't given us our signal yet. So even though it's called the fast MACD, it's not fast enough for this UNG. You might use some different sort of strategy to help you identify tops and bottoms in this one. One last thing I'd like to do with you, Styles, that I'd like to make sure that the options, there's enough people trading them. I wouldn't doubt that there is, but let's take a look. Let's take a look at the April 2024 options, trading every dollar. That makes it really nice. The bid ask spread is not so bad. So we've got some, if you don't want to trade the actual ETF, you could use leverage like Sip talked about earlier. And then as far as our protective option, we would probably use an out of the money January 2024 right now. It too has a lot of activity. So all to say, there's plenty of activity in the options. I think you can trade this one. We are at a bottom, but I think you have to do some back testing to find what indicators are going to help you leg into this position accurately. Fast MACD is a little bit too slow for UNG.
Yeah, and it's got a pretty tight range there, basically $6 to $8. So you definitely play with that, but I think we, call out a few better opportunities throughout the last few weeks. So Styles, thanks for throwing that one out there. Let's move to the West Coast, to my coast, and this is Jessica in San Jose, California, interested in Gilead Sciences, ticker symbol GILD. Little biotech action.
Yeah. First thing that jumps to my mind when I look at Gilead is expensive. It's up there in 70s. It's about $76 right now, $76 and a quarter. Um, if you've got the portfolio to do this, then all more power to you. But just realize as you get up in price, think about this. Symbols like to move in percentage points, right? So you'll see, for instance, a 1% drop in a stock. Well, if it's a $10 stock, a 1% drop is 10 cents. If it's a $70 stock, a 1% drop is, 70 cents, not 10 cents. And so you got to keep that in mind because we're talking about lots of 100, right? Options are traded in lots of 100. So the bigger the price, the bigger the drop in dollar. If you've got a smaller portfolio, that might be more than your risk appetite will allow. Okay, all that disclaimers aside, it looks like a bottom is forming here. We're trading in a pretty tight range. So $76 to $80. This is perhaps tighter than I like it to be. In fact, let me give you a little trick. Take a calculator. I'm going to pull my calculator up right here. And take the width of the channel you're dealing with. So I'm just going to use a common drawing tool. It's called the Fibonacci price retracement lines. You don't even really have to pay attention to the Fibonacci part if you don't want to. And you basically draw it between support and resistance. And again, I'm kind of nailing it at, let's manually type it in here. You'll see as I pull it up on the screen. I'm nailing it between about $76 and $81. Let's put $81. And what I really want you to pay attention to, I've got all these different levels, but all I want you to really pay attention to is your support and resistance. So that would be the 0 and the 1. Those are your start points and end points, and the halfway mark. So that's that 0.5. So if I do that, you can see we've now drawn 76 to 81, and that looks like it might be, maybe we say 70, 75. I'm going to tweak this a little bit. Maybe that's a little bit better, 75 to 81. So we take the width of that channel. So that's $6, right? 81 minus 75 is $6. And we divide it by this halfway mark. So you take your calculator and you say 6 divided by 78. And that'll give you a percentage. In this case, it's 7.7%, right? Here's where if it's 10% to about 40, 45%, that's a good one for selling premium against. When you start to get below 10%, maybe between 5 and 10%, I get a little nervous and I want to see something else that tells me that this stock is in that channel and it's not actually consolidating, getting ready to break out. And finally, if it's below 5%, I don't care what you try to prove to me. I'm not going to touch it as a premium sale. It's more of something that I would prepare to trade for a breakout. So keep that in mind with my little trick here. Take the width of the channel and divide it by the average channel price and get your ratio, right? Okay, so with that said, this is a little nerve wracking. If you can find something that makes you comfortable that it's going to stay in this range between 75 and 81, more power to you. But it's got a couple things going against it. So I might look for lower hanging fruit. And that's where I think I'll let that one stay, Jessica.
All right. That's Gilead Sciences, a little bit on the more expensive side. But hey, if you got the portfolio, you can look at names like this. If you don't, like AJ said, there might be some better names to consider. Staying out on the West Coast, the best coast. This is Terry in Mountain View, California, interested in a social media name that I kind of feel is waning and dying off, and that's Snap, ticker symbol SNAP, unless the young folks are still actively using it, which I don't know. I'm starting to get up there in AJ, so I don't know what the young folks are into these days.
Yeah, I'm more removed than you are. So yeah, I just want to keep going back a little bit to see where we were with our high. Let me go to a 10-year chart. Okay, so at its high, when was that? That was in 2021 is when Snapchat hit a high, and that was September of 2021. So we're about 2 years removed from that. Since then, Snap has come to about 10% of its high. So it was trading up at about $83. It's down here at about $9. So that's interesting. But if you look back at the life of Snap, it lives in that $9 range. Yeah, it had that moment of like exuberance, but they're back down to what they were always worth. So I don't know if it's a growth company or what. They actually have figured out, if you look more recently, how to make sure that their business doesn't, eat into itself. It either breaks even or makes money every month. And that's really, if you're talking about the longevity of a company, that's really what you need to do. You just need to make sure you can pay the bills and maybe make a little bit of profit. And that's what it seems like they're doing. So even though they may not be popular, they're figuring out in their strong fan base, whoever their diehards are, they figured out how to keep the company the lights on. So I like that. I like that for premium selling. This is Terry. Terry, I like where you're going with this. This is one that we can maybe create an income off of. Let's make sure that the option chain can support some strategies. So I'm going to go look at the option chain. And I'm going to specifically take a look at the 3 to 6 month out option. This is the one when we start doing complicated premium selling, this is the one that we would be buying and selling the most. So I want to make sure any option that's about 3 to 6 months out has traders trading it so that if I need to buy or I need to sell, that there's somebody who will sell or buy from me right then and there, and that I won't be left holding either an order or the actual option looking for somebody. So we'll take a look over here. Yeah. I mean, look, the bid ask spread is a penny. That tells me that there's a lot. And look at the open interest. There's a lot of people trading options on Snap, even these options that are out 4 months. So, you know what? I'm very comfortable with my option strategies on this. It looks like we are looking for a bottom here, like many stocks. And I think correlation is going through the markets in September is going to be one of those ones where you kind of have to like trust in your signals and not get caught up in whatever soft data there is out there, mainstream media news or anything like that. September is one of those months where you just trust your signals. A lot of the symbols, not just Snap, went up for a little bit, came back down. I think we're just testing double bottoms in the month of September here. Let's wait for another test of the bottom for the double bottom to form. And then if you wanted to either buy Snap or buy some back month options to use that leverage that Sip referred to earlier, then that's what I would do. I would let it appreciate. It looks like it could stop at 12, maybe $13. As soon as it does, we'll put on the second leg of our premium selling trade and start collecting those insurance premiums. And remember, just like your homeowner's insurance and your auto insurance, just like that stuff expires, every 6 months, every year, and you have to re-up your policy, people re-up their option policy with you. So when your September option that you sold expires on somebody, they're going to buy the October from you. So that's how we can create an income stream off of owning the stock or owning the ability to buy that stock, incorporating a little bit of leverage. So I like it. I'll wait for the signal. I think that's kind of the theme of today is we're waiting for this double bottom to form on all of these symbols. And as soon as that does, we'll kick it in.
Yeah, Snap's got when you go out over 2 years, that fall off looks very dramatic. But when you kind of zoom in, it does have some support and resistance lines with a decent range, right? You're $8 to $14 with very liquid options market at a nice price, right? So this is definitely one that I would keep an eye on in terms of opportunity. So
they would be smart. They would be smart. I know nobody from Snapchat is listening to me, but they would be smart to acquire some sort of, take a playbook out of Microsoft or something and acquire some sort of cutting edge, something that'll break them out of this current lull that they're in with their existing fan base.
Yeah, from what I remember, they've been doing a little bit of the AI stuff, right? AI is kind of like the theme these days in terms of what the tech companies are doing.
AI combined maybe with AR, right? The augmented reality.
Totally.
I think Snap was really good with augmented reality. They need to now somehow combine those two. Boy, I was looking at the AR, by the way, of TikTok. Man, people are putting together some crazy effects on TikTok, and TikTok got the equation right. So Snap should probably look over and leverage with pride off of TikTok.
Without a doubt. Real quick, because we're running short on time.
Oh,
AJ, did you see the news from China and Apple? How they're going to be cutting back on the usage of Apple, and it's kind of like waning on the entire tech sector. Any thoughts on that?
I mean, China is a big player, although Apple should really think about India for the long-term play because India's got people as well. But China's responding and trying to whittle away at what's happening here in this capitalistic market. It's interesting. But I think it would be smart for companies like Apple and them to think of plan Bs.
Yeah, I another interesting statistic I saw with China was that the U.S. is starting to import more, if not equally, from Mexico. So Mexico importing in the U.S. is starting to make a big comeback. So very interesting things playing out in China. But before we head out of the show, I do want to give everybody opportunity to head on over to AJ's free web portal, the Trading Training web portal, where he's got a ton of great tools, some videos, some indicators, some white papers, some just a ton of information if you're seeking more on how to implement some of these strategies. And if you scroll up in the chat a little bit more, we did throw the link to the webinar in there as well. And so definitely some great places to go learn more about options and Trading Trainer and what the program participants do on a week-to-week basis. So head on over there, check that out. AJ, football season's back. Any thoughts? You a big football fan?
No, I'm a beach fan. And so I'm here at the beach and I'm just going to keep going to the beach every day.
All right. Well, my Bears are playing the Packers this weekend, so
Ah!
that's my big weekend extravaganza, and that's our biggest rival. And I don't know. I just really
Green
get
Bay,
excited about it.
that's Wisconsin. Where are the
That
Bears out of these days? LA?
Chicago.
Chicago. Oh shit. Sorry, Sip.
You were around when they won the Super Bowl, right?
Yeah, the Chicago Bears with the refrigerator Perry.
That's right. That's right.
I think he
All
passed
right.
away.
I think so too. Yeah.
Yeah, he was big.
Um,
I get into it when the playoffs and the Super Bowl. I don't really get into the regular seasons with the AFL and the NFL and all that good stuff. But
well,
I'm excited about it.
the season kicked off yesterday, so usually that's kind of like all right, fall is coming around, football is
Yeah.
back, get back to school. Okay. Before we head out, any final words, anything we should be keeping an eye on heading into next week?
Let's think about the fact that options for September are expiring early this month. So they're expiring next Friday. It just feels like September just started, but the monthly options are expiring next Friday. So keep that in mind. Sell your last minute September 15th premium if you can, and then we'll get our focus on October.
Awesome. Thank you for your time. Thank you, everybody, for tuning in. If you've enjoyed the broadcast, hit that like, hit that follow, hit that subscribe button. We appreciate it. And if you have any questions, leave it in the chat. Send us a DM, and someone will try and get back to you as soon as they can. Otherwise, thank you once again, and we'll see you guys next week.
Bye, everybody. Thanks. 97 under the belt.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.